So this I would say like the dumbest trading strategy in the world can make you $10,000 a month if you follow it correctly. Now in this video, I'm gonna teach you the exact strategy and I'm not gonna hide anything. All I ask from you in return is that you hit that like button, and if it works for you, hit the subscribe button, right? Just to support me. Now, I have previously taught you guys a lot of gold strategies, right? Gold trading strategy, we have the Midas model. We had the 8 p.m. Liquidity sweep where we get like the sweep of the high or low, most recent high or low, and then we look for 1 minute market structure shift. But again, in this video, I'm going to teach you a simple pattern that you can use every single day. It happens every single day. There's not a single day where it doesn't happen. All right. So here are the rules of the strategy and you have to follow them. Otherwise, it will not work for you. So number one is, first of all, we have to identify the higher time frame order flow. Now this higher time frame order flow can be 1 hour time frame. So basically, just 1 hour. The next step is we need to pair up time and price. And third is we have to use our entry model, and we can basically use PD arrays as well. So higher time frame PD array, and let's do lower time frame entry model within higher time frame PD array. Okay, now I'm going to teach you everything, how to identify the order flow on the 1 hour. I'm also going to teach you why time is important for this strategy and why price is also important. And I'm going to show you what it looks like, because we usually have price action like this or this, right? We want to be somewhere, we want to be trading this type of price action, but don't worry, I'm going to teach you how to identify these price, if it's consolidating, if it's trending, if it's clean, if it's tradable even. And then I'm going to teach you the lower time frame entry model that we're going to be using, okay? Within the higher time frame PD array, which is kind of optional, but it kind of increases the win rate. So this is like the dumbest strategy ever. When I teach you, you're going to realize that as well, because it's so simple. So first thing first, time, right? The time is going to be Asian session. And the Asian session starts from 8 p.m. New York time till, for me personally, these are my tweak timings, midnight open, New York time. Okay, so from within this time period, we have to look for a setup. If there's no setup within this time period, we are not looking to take any more trades specifically for this strategy. Okay, now how do you identify the higher time frame auto flow? So let me go to this random NQ pair and let me show you this, all right? Now, as soon as I open a pair or asset, I should be able to identify the direction within, I'd say like 3 seconds. If I start second guessing that, maybe it's just consolidating, maybe it's going down or maybe it's going up, then I move on to another pair. But specifically, we're going to be trading gold for this. So you have to be careful. So for example, let's say that we are in a condition like this, where nothing is happening, right? We're just consolidating. You should know that. This is not tradable. Simple as that. Anyways, we have the timings. We identify the order flow on the 1 hour. Are we going up or are we going down? If we are going up on the 1 hour, we are going to be only taking long positions. And if we're going down, we are only going to be taking short positions. Very simple. Now, time, as I said before, this is going to be the time. And then I'm going to teach you the lower time frame entry model and the entire exact strategy that we're going to be using. So the Asia session, right? Let's say it starts here. And price has been going up. Now, first thing first, you want to mark out 1 hour PD arrays. So these could be a fair value gap. They could be a breaker block, can be an auto block over here. but it has to be a key level, okay? And preferably, it has to be in a discount. Now, let's say that there is a fair value gap over here. And let's say that the midnight open is over here, right? Perfect. Now, let's say that the midnight open is here and we have price around here at the moment. Now, what we want to do is, first of all, wait for price to come near the PD array. And once it taps into the PD array, what you want to do is drop down to 5-minute time frame. Okay, this is specifically for gold, and I use this exact strategy to send out signals in our private Discord. And I'm saying this because if you're not in there, you're missing out. Now, we are going to be trading the 5-minute time frame, but for that, what we have to do is first identify some sort of liquidity sweep, which we have over here. And then price also taps into some form of high time frame key level. Now, this time frame in some cases could also be 15-minute time frame levels, you know, but I usually stick with 1 hour and not higher than that, because since we're on the 5-minute, we don't need to be on the higher time frames. Now, here's the entire entry model. All right, watch very carefully. So we have the liquidity sweep. We tapped into the 1 hour PD array, and now we have this 5-minute dealing range. This high, from this high to this low over here. This is a dealing range, and within this dealing range, we have to identify fair value gaps. If there's one fair value gap, that's fine, but if there are 2 or 3, you have to mark them out. So let's say that there is a fair value gap over here on the 5-minute time frame. And we are in the Asia session. Now, simply what you are looking for is price to inverse above the 5-minute fair value gap. Okay? Or if there are multiple fair value gaps, so let's say there were like 2 fair value gaps over here that formed on the 5-minute, and price is like here, you want to see both of them get inversed. Now, that is part 1. Now, this is going to be your entry. As soon as price closes above these fair value gaps, that is your inversion fair value gap, IFVG. And then this is going to be your long entry. Holy shit, where is this? My God. But anyways, this is going to be a long here. Your stop's going to go below the bodies of the candles, not the wick, because your stop loss is going to be big. Below the bodies, the closing and opening. Now, here is the main part of the strategy, and you have to watch very carefully. So this is the closest liquidity point that we have, right? So it is the high that formed on the 5-minute. So we have one liquidity pool over here and one liquidity over here. Now, when you are in the trade, right? Let's do this. Price will go down maybe, and as soon as price hits this closest liquidity level, you are going to move your stops to break even. No ifs and buts, just move your stop to break even, because the risk management for this strategy is the most important part. The entry model, yeah, sure, they can give you entries, but if you don't follow this exact risk management strategy, it's not going to work out for you. I'm really sorry. Now, there's one more scenario where, let me just get rid of this. Before price gives you an entry, it takes out the closest liquidity level. So this is let's say that this is the 5-minute candle. It is still open. It's not closed, and price eventually takes out the closest liquidity level. Then the setup becomes invalid. The point here is that we are looking to enter in the trade before market structure shift, the typical market structure shift. So where people are looking for a market structure shift, right? You're basically entering here. And often what happens is once you get market structure shift, price just reverses, right? So we are trying to avoid that by entering with a lot of confluences here, which is basically IFVG is one of the strongest PD arrays out there. So once you have the inversion on the 5 minute, you are again taking your entry, right? You are going break even here, and then you can go for 1 to 2 RR risk to reward, and you have to take one partial at 1 to 1. So you at least make some money, right? So this is going to be your first TP, and your second TP is going to be 1 to 2. So you close around 30% of your position right here at the first partial, and then you close the remaining amount at 1 to 2. In some cases, what you're going to have are clean equal highs like this. So then you can have your final TP up there. There's nothing to worry about. Trust your trading plan, trust the model, and it is going to work out for you. Now, it will of course look the same when you invert the chart. If we are bearish on the 1 hour, we want to look for buy side liquidity sweep into some form of high time frame PD array. And then we look for 5 minute inversion. We take our entry and we target 1 to 2 RR. Simple as that. Nothing complicated. Pretty much dump if you look at it, right? We're looking for price to tap into some form of key level, looking for 5 minute inversion, and that is pretty much it. So now that we have understood the model, I'm going to give you guys some examples, and that is going to clarify each and everything. Right, so here is example number 1. And you can clearly see that on the 1 hour, we are going up on gold, right? It is clear. I don't have to second guess it. I just know for a fact that we are going up. So why it makes more sense to be trading to the upside is because you have better odds at winning the trades. Simple as that. If you want to be taking a reversal here, then it is basically not in your favor because we've been going up and up and up. So what makes you think that, all right, we're going to push down from, especially at all times high? Like, come on, bro, right? So now on the 1 hour time frame, what we have is this fair value gap. That is a key level, right? Now we are waiting for price to tap into the fair value gap during Asia. It can tap anytime, but like your entry must be during Asia, right? So now that we're inside it, we're gonna go drop down to 5 minute time frame, and we're looking for a liquidity sweep and then our entry pattern. So over here we have a liquidity sweep, and let me just make it a bit lighter for you guys. Okay, we have liquidity sweep, and then we don't have fair value gap for now, so we cannot look for inversion. But right there, what we have is another liquidity sweep, and eventually we get one more liquidity sweep right there. But then also notice that from this dealing range high to this dealing range low over here, what do we have? We have this fair value gap. And do we inverse above it? Yes, we do. You can clearly see we closed above it, right? Slightly closed above it. So now this is going to be your entry. Your stop loss is going to go below the bodies here. You're going for 1 to 2 risk to reward ratio. Your break-even zone is going to be if the closest liquidity level is way far up above. Your break-even zone is going to be 1 to 1 with one partial. So let's see what happens. Bang, right there. We just hit our TP in one single candle. Because why? We had time and price aligning together. We had price inside the 1 hour fair value gap. The order flow was bullish. And then during Asia, we look for liquidity sweep inside the PD array, and then we look for inversion on the 5 minute. We are not looking for a market structure shift because guess what? Right? Sure, you got a market structure shift, but then the next thing you know, that if you were waiting for price to come into this fair value gap over here, after market structure shift, you would have basically taken a loss here. Right, so here is another example. We are clearly pushing up, and we have this fair value gap over here. That is our key level. Now we are simply waiting for price to tap into our fair value gap, which is our key level. And right there we have a tap. Now let's drop down to 5 minute time frame. Now, so first of all, we have liquidity sweep. We tap into the higher time frame PD array. And one more thing that I need to tell you is that volume imbalances and the gaps over here, they are considered to be a fair value gap for this strategy. So if there is a fair value gap over here, and then there's also a gap and a volume imbalance, you have to consider them as well. Now the next step is we are waiting for inversion above them and our entry must be during Asia session, right? So this is when the 8 p.m. opens, and then we're waiting for inversion above it. And right there we have our inversion. Now stop, I would just basically put below these bodies over here, which is a big stop, but I'm gonna be fine with it. And then I'm gonna go for 1 to 2. So eventually price goes up. It didn't stop you out at break even, right? Because that is our entry. And at 1 to 1, or basically you would go break even right around here, because that is the closest liquidity level. At 1 to 1, you're gonna take a partial, so you have secured some profits. And then at 1 to 2, you're gonna quit out of your entire trade. Literally simple, mechanical, and once you have the order flow right, I promise you there's nothing better than this model, especially for gold. Like, I'm teaching you this for absolutely free. People would charge like thousands of dollars for this. But here we are, guys, giving you free value. Let's move on to one last example. So here's the last example. And also I'm gonna drop this one more sauce just for people who are still watching and not for those who have left the video. Is instead of looking at 1 hour and 5 minute, you can also look at 15-minute and 1 minute time frame. So basically your 15-minute time frame is gonna be your high time frame. So mark out the PD arrays on the 15-minute, and then you can take the same exact entry model on the 1 minute. However, for this video, I'm gonna stick to 5 minute and also 15-minute PD array for this example. So over here, what we have is this big gap, a fair value gap, and that is a key level. Now, if I go on to the 5-minute time frame, you can see that initially we did tap into this level, but we need to see a liquidity sweep after the Asia open, and also our entry during Asia, right? And also we need to be coming from a PD array, or we are inside the PD array. So over here, what we see is that we get a liquidity sweep. Our bias, our order flow is bullish. So right here, what you can see on the 5-minute, what we have is a inversion fair value gap, right? We only have one fair value gap from this dealing range high to this dealing range low, right? Now, your entry is going to be simply here. Stop's going to go below the bodies here. And 1 to 2 is what you're going to aim for. You're going to go break even here, or at 1 to 1 here, because the closest liquidity level is way too far. So 1 to 2, you are in and out of the trade. We have this key level. Price did already tap into it before, but it doesn't matter. It has to be coming from a key level. It doesn't matter if it's mitigated or not. And once we get the liquidity sweep, we tap into this higher time frame key level once more. So you can see we have liquidity here. We sweep it. We tap into the PD array, the key level, and then we get inversion. And then you're going to get moves like this. So that's going to be it for this video. I hope you guys enjoyed. There's a link down in the description. Click on it if you want to see me send out signals using this model again and again and again every single day.